let's take this conversation forward. I understand that Shailendra Kumar, who's director at Narnolia Financial Advisors, is joining us. Shailendra, thanks for joining us on this show right now. What is the message that we're getting out of the markets? Two things I want to ask you specifically about. Are they discounting the BJP's performance when it comes to 2019? Is that one factor that's playing out in the markets? The second one is, what are the market expectations now that we have a new RBI governor? What is the market really telling us in terms of that appointment?
Yeah. So coming to the election outcome, what we are seeing right now, that the market earning and the valuation is creating a clear support level for the market. So yesterday when we touched 10,333 for Nifty 10333, you were trading at 16.6 times FY20 earnings. So earning and valuation is clearly giving you a kind of support for the market. Having said that, the political uncertainty for sure in the short to say another 6-7 months will keep the upside also capped. So earning and valuation giving you support on the lower side, and the political uncertainty will give you a kind of a cap on the upper side. Look at the result election specifically, even in Rajasthan and Madhya Pradesh, the voting percentage difference between a BJP and a Congress was not very high. So in Madhya Pradesh particularly, only 0.1% of voting percentage difference is there. So you don't have very clear view of 2019 election. Having said that, surely there are headwinds against the incumbent government right now, but it's not a clear-cut sign of surely a policy regime changing next year. Just having said that, now look at the RBI side of Mr. Das coming here and all the contentious issue, namely using the RBI balance sheet for recapitalizing PSU banks, or some kind of a tweaking with the PCA norm, or could be more liquidity to NBFC and MSME segment. Also, some clarity on the separate regulator for payments. I mean, these are the key issue, which is like where the differences were there between RBI and the government. Mr. Das having served a very long time with the government, and he has been quite vocal in terms of telling his opinion to the market participants. Surely gives you some kind of a confidence that from here on, whatever news will come from the Mint Street or the political center will be slightly aligned. So market participants will have more certainty. Or look at it this way, yesterday after Mr. Patel's resignation, the fixed income market, the bond market, the 10-year bond yield spiked to 7.7% kind of thing. But today now it's trading at 7.4%. So even the fixed income market is telling you that some kind of a positive, stable, at least communication looks in offering in the shorter term at least.
There is no doubt about that, going by the immediate readings of the markets and what they're trying to say to us. But indeed, this appointment of Shaktikanta Das, who takes charge as the 25th governor of the RBI, is on our radar. He's taken charge a few hours ago at the central bank's headquarters in Mumbai. The former Economic Affairs Secretary brings with him 37 years of experience in the civil services. He was one of the key players in implementing demonetization as well as the goods and services tax regime. In fact, let's go across to my colleague Vineeta. She's joining us from the RBI headquarters just to put in perspective what the buzz is over there, and if people believe by and large that Shaktikanta Das is going to be the right man to lead the charge, as it were, against the recent tensions that have been seen between the North Block and Mint Street. Vineeta, what are you picking up there?
Shaktikanta Das has taken over as the 25th governor of the Reserve Bank of India, and it's been a steady stream of bouquets and well-wishers entering and exiting these gates behind me at the Reserve Bank of India headquarters in Mumbai. Now, of course, the challenges that lie ahead for Shaktikanta Das are many. Let's start with, the fact that he brings with him very, very rich and very relevant experience for the job. Most recently, he served as the Economic Affairs Secretary in North Block. So that will definitely go a long way in helping repair the relationship between the government and the Reserve Bank of India that seems to be at an all-time low. His colleagues from New Delhi also, attest to the fact that Shaktikanta Das has a fair amount of skill in the area of consensus building and conflict resolution. So that too will be very crucial, and most recently he demonstrated that at the G20 where he was India's Sherpa. But let's talk about the challenges that lie ahead then for the newest governor at the Reserve Bank of India. Very crucially, his most immediate task will be to preside over that 14th December board meeting. The Central Board of the Reserve Bank of India will be meeting here. And of course, on the agenda is what they announced at the previous meeting in terms of appointing an expert panel to undertake a review of the RBI's economic capital framework. Who will be appointed and what the final contours of that committee will be. Any updates on that front will be very closely watched. We're also awaiting any updates as far as governance changes that are made, structural governance changes to the RBI. So any updates on that front will also very much be in focus. Any boost coming in on the liquidity front to MSMEs as well as housing finance will also be something that the market is watching out for, and most crucially perhaps any easing coming into prompt corrective action norms for those weakest banks in the PSU banking space will also very much be something the market will be awaiting updates on. So lots that lies on the agenda as far as the task that lies ahead for the new RBI governor. But as of today, it is a day of celebration here at the Reserve Bank of India as Shaktikanta Das takes over as the new governor at Mint Street.
Thanks for taking us through all of that. All eyes really in terms of how this entire dynamic plays out. Vineeta getting us the latest when it comes to the new RBI governor. We of course have had multiple conversations about the appointment, and one of them was with the former RBI governor C. Rangarajan, who believes that Shaktikanta Das will carry forward the legacy of the RBI as well as be able to resolve the complicated issues that are at the bone of contention between the RBI and the Finance Ministry.
Shaktikanta Das has a lot of experience in economic affairs. Therefore, he should make a good governor. He must live up to the traditions of the Reserve Bank of India, maintain its credibility, autonomy, and work towards that. So, I expect him to, as he becomes the governor of the Reserve Bank of India, to uphold the best traditions of RBI. We do have larger amount of foreign exchange reserves now. All this will be taken into account while deciding what proportion of the surplus should be transferred to the government and what proportion should be go to the reserves.
We've got a lot of reactions, and indeed you just heard Dr. Rangarajan speak about the new appointment of Shaktikanta Das as well. Definitely something that's steering the markets, and if you look at the banking index, that certainly seems to be moving up quite strongly, about a percentage point gain coming in over there. 26,450 levels is where we're currently at. So it's off the day's highs, but still doing quite well for itself. The banks are rallying. This is happening for the second day now. Yes Bank, of course, is leading the charts, and the counter is gaining over 4 percentage points in trade today. Federal Bank, IDFC, these are also up over 3 percentage points. And if you look at the PSU banks, which I just mentioned a moment ago, Bank of India, Vijaya Bank, Union Bank, all of these are rallying over 4 percentage points. So definite traction over there. In fact, we had a chance to speak to Ramesh Singh, who is the Executive Director at Dena Bank, on what changes are likely under the new governor. This is what we got from him.
Particularly a person with a large experience of reforms is certainly going to be a very positive for the banking industry and economy as a whole. Certainly would look into the facts, the problems being faced by the banks, which are particularly under PCA. It's certainly going to be a quite big boost for the banking industry as a whole. And secondly, that definitely banks would look to get some relief on CRR cash-to ratio. Then that much liquidity will be in the banking industry, which definitely will be a big help for the industries.
All right, so that of course is the belief that we're going to be looking at a boost really when it comes for the banks given the current situation at hand. Let's move over to what's been happening in the auto stocks, because there is where we are seeing some pretty speedy gains today as the Nifty in fact outpaces all. That Nifty auto sector really outpaces all the others. The index is a top gainer with 3% of a surge that we can see at the moment. I'm just pulling it up for you thereabouts. Really the stocks that we're talking about really are like a Hero Moto, a Tata Motors, Bajaj Auto, as well as an M&M. Those are all trading with more than 3% of gains at the moment. Ashok Leyland, in fact, reviving in trade. Let me pull that up for you right now. You can actually see how that counter has been performing there. Pull up an Ashok Leyland. You can see that it's up about 2.5% actually. And we also, of course, have spoken to Gopal Mahadevan, who's the Chief Financial Officer at the company, who basically expects a muted Q3, but also a reasonable full-year growth of 20% to close FY19. Listen in to exactly what he told us.
Q3 for the current year, we must remember that we'll have to benchmark it against Q3 of last year, because Q3 of last year had nearly a 42% growth. So, we had a high base effect. So if the infrastructure spends were to continue, and if the necessary levers are available, I think Q4 should see a bit of growth. So overall, we should end up at about 15 to 20%, if not a little higher growth for the full year.
All right, interesting commentary that we're getting out of Ashok Leyland. But Shailendra, how are you looking at the auto space going forward, and what are the valuations that you're finding attractive?
Yeah. So among the auto stocks, two things are very clearly visible. Segment which is exposed to the rural side of the economy, they are getting better volume growth. In terms of pricing, still I don't see any pricing growth per se in all these auto names, but the volume growth for those that is exposed to rural economy is little positive. Other thing which is playing positive for the auto sector is the margin expansion, which has not happened for the last year and a half. You see, because of raw material inflation, they were unable to expand their margin. Pricing, because of some competition, new product launched by the various fighting entities, had made sure that the pricing growth doesn't happen. But the top line will grow purely because of volume numbers. Pricing will not be there, but as the margin will expand because of falling raw material prices, so maybe in another quarter or two, the valuation will start looking better than what it is today. So somebody looking for 3-year kind of horizon is still, it's a good sector to be in. In the shorter term, let couple of quarters pass, as some clarity comes whether the pricing growth, pricing power will come in their hands or not. Let's see that by Q4 end.
Watching the auto sector very closely, considering it has been such a strong performer otherwise, but with suppressed demand, with input costs going up, the room for margin expansion, like you mentioned, Shailendra, not very high. The pricing power seems to have eroded as far as auto companies are concerned, especially the passenger vehicles. See how Maruti has done for the whole year as well. There are definite pressures that are building up and something that markets are jittery about, but also a lot of experts are saying buy into these dips into the auto sector as well, and some of the top line names are going to reap rewards going ahead from here, especially the commercial vehicles, which have been laggards in trade by and large as far as the markets are concerned over the year gone by. But we'll see how that goes. What we're also watching is the metals counters. Today we are seeing a strong show from them. Jindal Steel Hisar, and Jindal Steel itself is leading the way with the gains that we're seeing right now, over 5.5 percentage points each. Currently, we are looking at Jindal Stainless Hisar, 7.8 percentage point gain now, and JSPL is now about 6.5 percentage points. Tata Steel, Nalco, SAIL, all of these are going quite strong today. And if you look at the overall space, the Nifty Metal Index today, it has gone up over 2 odd percentage points. So you're looking at good traction within that space. Of course, it has come off the day's highs, but still doing quite well for itself. But looking at what the sector has done over the year gone by, this is in the last 3 years, we haven't seen the kind of decline that has been seen in 2018, Shailendra. And indeed, the fall in global metal prices on those trade tensions between the US and China, with all these higher raw material costs, they've weighed in on the sector as well. What's the outlook now going ahead from here? Do you think that there are opportunities right now in metals, or would you rather park your money elsewhere?
See, metal, there are a couple of, because of the large fall in September, October, November, many metal stocks has fallen a lot, right? In the sponge iron segment, Jindal, the one you were talking right now, they fell almost like 242, I think 160 something, where the sponge iron prices in the economy had a very, some 2-3% kind of a decline, not very high. So this kind of a bounce back rally was there already to get into. Internationally, if you look at US, China, a little bit of talk is going on about at least some kind of a sanity coming back, disregard to what has happened with the Hawaii CFO case. Only one segment there, like copper. Copper has a lower inventory carrying right now for 2019. So there are maybe 1 or 2 names in metal space, pure metal space, where there might be some kind of a pricing gain because inventory is a little lower than what it used to be, say, prior years. Having said that, the better area to park your money still would be those areas which are user of metal. So metal prices will have little bit of bounce back. But the large inflation led by metal prices is I think will not happen in 2019 at least. So a lot of name where metals are raw materials. So in the engineering space, there I think good amount of margin expansion story is there for next 2 years at least. So instead of metal buying those areas which are user of metal, I think that's my stand as far as the metal pack and the related packs is concerned.
Okay, away from that, let's talk about what's really buzzing in another space altogether. I want to talk about an Aditya Birla Fashion that is seeing pretty smart gains in trade. It's up more than 8%. Now, that counter is seeing quite a lot of buying that seems to be reflecting on how we're seeing the movement of the stock. Moreover, CLSA is rather bullish on this counter and has raised its targets to 240 rupees per share. The person who is tracking all of this is Shefali Malik. She's joining us with much more on what the CLSA report says. Shefali, over to you. Why has CLSA raised that target as well as where is all of this bullishness coming from?
Well, the reason why CLSA has raised its target and has come out with this report is because they see multiple growth drivers coming in for the company going ahead. So they're maintaining the buy rating, and even though the target price is not a very huge target price increase from about 232 to 240 rupees per share, but the commentary that is coming in from them is very positive on this particular company. They are saying that we can expect margin expansion in pantaloons going forward, and the innerwear losses are also expected to peak in FY19. So post that, we can see some good traction coming in as far as the earnings for this particular company is concerned. Pantaloons has more than tripled its store network to 288 from 95 earlier, and the improving maturity of the store network and combined with the operating leverage, that is going to aid the margin expansion for Aditya Birla Fashion, and also increasing share of private labels, that should also aid the margins for the company going ahead. They've also given the sensitivity analysis of the margins with regards to the earnings of the company. So they're saying that every 1% change in FY20 margins, that could impact the EPS by about 44% for the company. So on one hand, it's a positive, but it could also mean a huge volatility going ahead as far as the earnings are concerned. So they expect about 33% FY18 to 21 estimated EBITDA CAGR for pantaloons going forward, and they are saying that the lifestyle and the Madura brands for the company, as far as these particular brands are concerned, the focus is going to be on the revenue growth, and Madura remains a cash cow for them. They are also going to focus on improving profitability in fast fashion, and they expect about 29% EPS CAGR in FY18 to 21 with very sharp ROE expansion coming in for them. They've also increased the FY19 PAT estimates to about 114 crore rupees versus about 80 crore rupees last year. So a very positive commentary coming in from CLSA on this particular counter.
All right, a lot of positivity coming in, and we can of course see how that stock is reacting in trade. Shailendra, just coming to you, what is your take on an Aditya Birla Fashion, as well as how do you feel whether they are better placed to face competition versus peers?
Yeah. See, Aditya Birla Fashion, expand the area, let it be organized retail. So whether the fashion side or other side, let's call it like organized retail per se. They were trading close to 4-time EV to sales a year back, and then the last 1 year, though the sales has grown up for most of the organized retailer by 30%, the prices have hardly done anything, almost sideways to a little bit of decline. So from 4-time EV to sales, most of the retail name organized players had come down closer to 3-time EV to sales, which is not bad looking at the kind of future growth potential this space has right now. Also, in terms of overall per capita, spending on the organized side is not very high in India, and the kind of phenomenal growth scope that all these retailers, including the Aditya Birla Fashion or maybe Trend, I would add as a name, the kind of growth horizon they have for the next 10 years is much higher. So the kind of sales number that we see today for these organized retailers and the kind of number that possibly can happen if the execution remains the way it is for these names in the next 10 years, the sales itself will be multiplying by more than 3 times according to our expectations. So this space remains very attractive. Maybe because of a couple of headwinds on the margin front and all, you will not get a very fast capital appreciation in a 1 year time frame. But if you are really a buy and a hold 10-year investor or a 5-year plus investor, organized retail remains a very good space for a large wealth creation.
The pressures are quite high within that sector, and indeed how that's likely to play out on the margin picture and how much that can expand going ahead. That's certainly something that we'll be watching out for. But the CLSA report has really buoyed the stock today. About 8 percentage point up move coming in on Aditya Birla Fashion. Meanwhile, here's an exclusive that